Welcome, everybody. Thank you for joining us today. We are broadcasting live from New York City, Connecticut. Scott, you're in Manhattan, right?
Long Island.
In Long Island. So thank you everybody for joining us today. We're super excited to have Scott and his colleague Bill and some of his other colleagues on the call today. We're going to handle this today as we call a luminary series, which is more of a fireside chat. And it's a topic that I think that many of you are interested in. Obviously, you signed on to hear about it, and something that has been progressing in an interesting way. Just editorial, I was an early investor in some public companies in Canada and cannabis, and things have changed dramatically. We're super excited to hear the story and the success of Silver Spike. And just to be clear, we can't hear or see you, but we encourage you to ask questions to the chat box in the Q&A. We have a lot of people coming on board today, so we'll get to as many as possible. So as it comes to mind, your questions, please feel free to put them in the chat box of the Q&A. Also, if they're after viewing this today, we're either Silver Spike or Family Office Insights will be posting it in some fashion, the recording. And so aside from you being at liberty to contact the officials at Silver Spike directly, we'll make sure they get in touch with you. If there's anybody that you know in your world that would benefit from hearing what you heard today or connecting with the firm, you're super welcome to do that as well. So with that, I'm going to go ahead and hand it to you, Scott.
Great. Thanks, Arthur. Good afternoon, everyone. Appreciate you all taking the time this nice summer day to hear our story. I thought maybe I would just start out with a brief background on my own personal journey into the cannabis space, which, truth be told, started somewhere around junior high school. But,
as it did for all of us.
But it since has evolved. But more relevant to this conversation, at least. I spent the better part of 35 years professionally investing in emerging markets, primarily in a variety of capacities at some large banks, at some hedge funds, and at a family office. Along the way, though, starting really kind of like in 2013, I started to stick my nose into what was happening in the cannabis realm. I think largely on the back of an interest that was sort of motivated through my background in emerging markets. And I thought, what I was sort of seeing and hearing about in cannabis sounded very familiar to me in broad general terms relative to what I had grown up with in emerging markets, where I was one of the sort of early pioneer kind of investors in that space in the mid 80s when I started my career at JP Morgan, at a time when emerging markets wasn't even called emerging markets. And like cannabis was sort of pre-institutionalization, lacking sort of a real kind of deep investor base, sort of interesting but poorly understood. And it was all of those things that sort of caught my interest and point of intrigue. And so together with two friends of mine, we started looking at investing in some companies with our personal capital. Probably looked at 70 or 80 different cannabis companies. And this was like really early days, right? 2013, 2014. The majority of opportunities that we were seeing were frankly uninvestable. However, through that experience, we got really bullish on sort of the secular thematic of like the industry growing, the momentum building, at the state level with respect to legalization and regulatory reform, what was happening in Canada, all of which, sort of led us to a very exciting conclusion about where this market was going, but kind of felt that it was really too early to be making a lot of good investments. And so we actually pivoted, though, and through that experience started an operating company called Papa Barkley, which was underneath a holding company that we set up called Egg Rock. And we set up Papa Barkley as an operating business with a pretty simple concept, which was to really try to be best in class cannabis brand, really catering to the health and wellness consumer in cannabis. And our thesis was, and still is for that business, that cannabis is really much more about just getting high. I mean, the recreational use of cannabis is by far the biggest component of the market. But I think we're just scratching the surface in terms of, consumer adoption with, the many things that cannabis can help people with, whether it's, sleep or pain. Its utility goes well beyond its benefits, for recreational use. So with that in mind, we set up Papa Barkley. It was a side hustle for me at the time. One of the co-founders in the business, Adam Grossman, who was really sort of the heart and soul and much of the visionary behind the brand, moved out to California to be the sort of owner operator. I was chairman of the board, but it was through that experience that I got a front row seat into the industry. We set up a semi-vertically integrated set of operations where we were formulating products derived from cannabis that we were branding under the Papa Barkley label, but we also had operations on the manufacturing side. We did all of our own manufacturing, having a fairly unique and proprietary process of how we got the infused sort of material into our end consumer good. And then we also set up our own sort of logistics and transportation. And so we weren't growing. We were vertically integrated, absent sort of the two extremes of the bookends. We weren't cultivating or growing. We weren't running retail operations, and we were doing everything in between in California. And so it was really through that experience that I became very immersed in the whole realm of cannabis and started, to spend time speaking to other company owners and operators and founders and investors and bankers, and really became very, frankly, just smitten with the space and thought it represented a huge opportunity, and eventually decided to go all in and set up Silver Spike Capital. And so we started Silver Spike about 3.5 years ago. And really, the idea around Silver Spike was to become an asset management business platform focused around things in the cannabis industry. And so this is a really important distinction, I think, when people think about Silver Spike, in that we didn't want to set up just a fund. We wanted to have a platform that really kind of spanned the capital structure, if you will, of the industry. So the first thing that we did is we raised a US listed, NASDAQ listed SPAC for an acquisition in the cannabis space. And that was a fairly noteworthy transaction at the time. That was in August of 2019. We were one of the first, not the first, but I think the second US listed cannabis-focused IPO. The IPO was led by Credit Suisse, which was the first time that a major bulge bracket investment bank had led a cannabis-related IPO. After we launched, to be honest, there were probably 5 or 6 other SPAC sponsors who came after us, raising money for targeting acquisitions in cannabis. We're proud of the fact that of that kind of crop of sponsors, we're actually the only ones who ended up doing a deal in the cannabis space, and we acquired a company called Weed Maps Technology, which was a deal that closed in June of last year. It ranks as one of the single largest equity financings ever for a cannabis company, about $580 million. So that was our first foray. We've been raising capital at the holding company to support, just the build out of our own infrastructure. And then, the other sort of noteworthy initiative that we accomplished earlier this year was we IPO'd what is the cannabis industry's first and thus far, to the best of our knowledge, at least, only 40 Act product that's in the marketplace. So we raised a business development corp, or a BDC, earlier this year in February. So we're one of only 20 or 22 IPOs that have happened in the US this year. We raised just under $90 million. And that is our sort of start in the lending business. We'll get into a discussion with more detail later in this presentation, or in the Q&A with Arthur rather, but super excited about the lending business. And then eventually as we'll talk about in more detail as well. We've got plans to launch a special situations fund, a private equity business. So, currently we have a SPAC sponsor business. We've got one successful deal. We've got two outstanding SPACs that are currently in the hunt. We have a credit business. The first product that we've raised for our credit platform is our BDC, but we have other fund and product launches that are being initiated now, which we'll talk about some more. And then eventually we'll have a kind of a private equity VC arm as well, and that will sort of encompass what we deem to be, the major kind of parts of the food chain within the asset management business. And the whole idea is to have Silver Spike sort of sitting in the center of this really complex industry that's like really specialized, very, very nuanced. It requires a ton of focus, a lot of expertise. We'll get into a discussion about that, but really, to position ourselves both in the center of that information flow. So hopefully we're smarter and better than our competitors, and also in the middle of deal flow, right? So that, we can be symbiotic in terms of having relationships and transactions that might have emanated from something that we were doing with the borrower in our credit business that later becomes an interesting target for us for one of our SPACs. And so, the whole idea was to have something within our own platform where, we have scale, we have size, we're covering pretty much all facets of the market. We have extensive relationships, and we feel that we have a really significant barrier to entry given the huge specialization and kind of, complexity and niche character of what is the market. And, it's going to be really hard if we can continue to execute for people to replicate what we're doing in terms of our experience, our relationships, our network, and our scale.
Hey, Scott, can I throw a editorial in here for 1 second?
Please.
So I'm certain it didn't go unnoticed, but oftentimes, and this isn't an editorial about your competitors, where people set up asset management companies or funds without the real experience of running an operating company in the genre that they're going to be raising money for. And in this case, you actually know where the bodies are buried as it relates to how to operate the company. So I think that's an advantage that is a serious advantage.
Yeah, no, it's a great point, Arthur. And I think that's right. We sort of often talk about, how we're bringing together all of our capital markets and investing experience. And we'll put up a slide on the team in a second. And, my partners together with myself, have hundreds of years of investing experience, and hundreds of billions of capital deployed across really, complex and tricky markets. And so, I think that what you get in Silver Spike, which I think is different from most, is that real kind of investing experience and acumen and capital market expertise and respect for complex and treacherous markets, which cannabis is, combined with a real insight in terms of how hard it is for operators in the space and understanding all of the challenges that the operators confront, having been there ourselves. And so it's a great point. Maybe that's a good segue for Sam to just screen share for a second. Also the partners, because we're an asset management business. We are our people and our capital, but the people are at the core of what we do. And so many of us have worked together in a variety of capacities in the past. Bill Healy and I have a professional relationship that dates back almost 30 years. He's an original partner of the firm and head of our capital formation efforts. Frank Coatzen, who runs our credit business, he and I worked together at B of A pre-financial crisis. We were extremely lucky to snag Frank after he retired from B of A, running all of the credit platform there, which was one of the largest credit, if not the largest credit platform on Wall Street. A tremendous resource. He brought in Umesh, who worked with him at B of A, Greg Gentili had worked very closely together with some of our former colleagues in emerging markets, joined together with Bill as an original partner in the firm, is now president of the company, and super talented guy, both in terms of helping to run the business as well as keeping an eye on what we're doing on the investing side, and Dino Colonna as well, who we didn't have a long history with, but joined the firm, was a great resource, made partner very, very quickly. And so, we've got a group of investment professionals that, are really sort of substantive folks that have been around the block, super experienced. Some had pre-existing experience in the cannabis space, myself, Dino in particular. Others like Frank did not, but you wouldn't know it, or Umesh, you wouldn't know it to talk to them, because I think very quickly they've come up the curve and probably know more than the rest of us combined. So
lest I be remiss, and I have been up to this point, this is all Dino's fault. He's my friend that introduced us. So thank you for that.
Oh, all right.
Yeah.
Well, thank you, Dino. I didn't know that.
Yeah.
So I think we can take that off the screen now. And maybe, Arthur, at this point, I'll pause and defer to you. I know you wanted to introduce Richie, and then perhaps we can move into the Q&A, but as you see fit.
Yeah, that's great. So we have a treat for you today, folks. There's a investor and a friend of the firm that is kindly agreed to step in with us today and chat about not only why he voted for with his checkbook with the Silver Spike folks, but the nuances about not just investing in people in a fund, but in an asset management company. So welcome, Richie. Thank you for being here today. Super appreciate it.
Good to be here. Thank you.
So tell us, if you don't mind, just start out with, what compelled you. There's reasons to invest with people that you've known for a long time. So, but aside from that, what compelled you to get involved?
Look, there's several things, but first and foremost, it was the people here. It's not every day that you have someone who've shared that journey. So I just heard Scott, you telling the journey. I feel like I recall the whole story. So Scott and I, came together in the mid '90s, and in fact, that's when I met Bill Healy. So we know each other for a very long time. We worked together at two firms, and I think beyond our working relationship, we there was a real friendship there, and so it really passed the boundaries of professional into our personal lives. There was, before my kids became of age, Scott was actually the executor of my will. So it talk about voting with trust. That to me sort of speaks volumes about our relationship. If I get hit by a bus, Gordo, the kids got it now, so don't worry about it. But so, it really, to be honest, Arthur, I watched the journey. Unfortunately, I wasn't allowed to invest in Scott's first cannabis venture because, where I was just prohibited, simple as that. But I was intrigued and saw it as a trend that, it's like so many of these mega trends, everyone sort of jumps in at the beginning, gets overcrowded, collapses, and a few emerge and become the winners. And I'm pretty sure this is one of the winners. But it's the history here of our relationship. And when I retired in 2019, we spent quite a lot of time talking about this venture that Scott was thinking, the platform, just as he described it then. He was describing it over dinner with the vision that he had. So I really, I had a great sense. And to Scott's point he made earlier about, the investment management business, I worked on the sell side for 27 years, and then I went to BlackRock and was on the buy side for 11 years. And I would realize, wow, did I really waste 27 years? Like, what an incredible business model an asset management company is. I mean, honest to God, unless you really do a terrible job on the investing side, it's a very simple business of P times V. And, you know, we earn a fee for being a good fiduciary on people's money. So I love the business of asset management. I personally think it is just a great business. And so I've stayed close to Scott, you know, lending him my expertise there. Not that he needs it, but it's there. And you know, very interested in the future.
So if you had to gently share with the group the highlights of why you're excited about this particular business as an asset management business, can you share the things that you've learned as an investor so far, and what things that you're optimistic about?
Yeah, look at you know, it's simple. You know, when I think of my own formula for investing in businesses, you know, what do I look for? And you know, the first and foremost, I do look to the people, and this is an A+ team. You know, I mentioned my relationship with Scott and Bill, and it goes back. I did the math earlier, guys. It's 28 years, believe it or not. And then I know, you know, I know Frank as well for almost 2 decades. We worked together back at B of A, and while I never worked with Greg, we have a long history of close to 2 decades as well. And I just think this is a high quality team. So the first thing I look at is, you know, the people. The second I always look at is the, you know, what is the domain knowledge? And, you know, it's the right mix of cannabis knowledge, but there's deep knowledge here in investing and in managing risk. I mean, it is tremendous. And, you know, and then the last thing I look at, well, I should also mention one other thing. I think Scott, you know, maybe you'll cover it later, is that some of the advisors that Scott has surrounded himself, I was very impressed early on. So when you talk about the domain knowledge, it's not just within this team. There are people outside that are advising the company that have just tremendous domain knowledge. And as I've got to know them, I've realized, wow, what a, you know, a wealth of knowledge to tap into, you know, everything from the pharmaceutical side to, you know, the business side. It's all there. You know, the consumer products knowledge that they come to the table. So, you know, I just looked at it. So then it comes down to the real question, which is execution. Can they execute, right? Because, you know, sometimes you can go and get a good business plan anyway, you can steal the damn thing, but can you execute it? And I have, you know, I do have conviction. At the end of the day, that's why I personally invested in the whole co and in, you know, all 3 of the SPACs, because I just believe in the execution of that partnership that you saw, that slide. I just have strong conviction that, you know, they can pull it off. So, you know, beyond the quality of people and a great business plan and the subject matter expertise, it is about execution, and they'll do it.
Yeah, that's super helpful. Would it be okay, Richie, if you hung around and jumped in anytime you felt like commenting on, you know, going forward here?
I am here. I'll go on mute and stop the video, and I'm all ears.
Yeah, and anything that comes to mind, please feel free to give us the high sign.
Okay, thank you, Arthur.
Yeah. So Scott, is it okay if we just get into the meat of the matter here and talk about what exactly you're doing, how you're doing it, and anything else you'd like to share with the group that's important?
That's great. Let's do it.
So maybe we talk a little bit about structure, so we get some framework of how you're doing this. You talked about the public company, the SPACs. You know, can you just give us a little bit of a, you know, overview of what exactly, if somebody wanted to invest in, what that looks like?
Yeah. So we have a holding company, Silver Spike Capital, underneath which sits all of our investing activity. We have a BDC, which is a publicly traded NASDAQ listed vehicle, Silver Spike Investment Corp, that people can buy in the market. SSIC is the ticker. Silver Spike is the external manager of that. Externally managed BDC, which is sort of a common structure. We have currently outstanding 2 SPACs, one NASDAQ listed, and another one that is Canadian listed on the CSE. Both of those are publicly traded vehicles, so investors can buy that. Those are in the hunt currently for acquisitions. And so those are, essentially those are the outstanding investment vehicles, and the, kind of the other layer at which, and, we'll talk about this more sort of at the end of our time, Arthur, but, we have taken money. So you can invest as an investor in one of our products, or you can invest at the holding company with us, basically, which is having sort of a position alongside the partners in management in terms of benefiting from all of the economics of, what we're doing in terms of the sponsor promote that hopefully we're earning on our SPAC activity, and the fees that we'll be generating on third-party management of assets that we're raising, and credit, BDC, other credit products, and then eventually, new launches into private equity and special situations. And so we have raised previously capital at our holding company level. We did that about 2.5 years ago, did a $7.5 million raise. We're going out just now with another $10 million private raise, which is a convert, essentially where you would be invested at the top of the house, and owning sort of a piece of our asset management business as opposed to one of our asset management vehicles. So a number of different ways for investors to sort of play alongside or into one of our investment products.
Would it be okay, and Bill, forgive me, it wasn't in the notes, the Reader's Digest version of an example of the types of things that you're investing in?
Sure. So on the credit side of the business, which today, the product that we have launched is the Business Development Corp. We announced, it's a public company. We just launched it in February. We announced recently one transaction, which was a $175 million loan facility to the Shrine Group. The Shrine Group is the parent company to Steezy, which is the largest brand in the industry, and one of the largest. Shrine Group is one of the largest private operators in the entire space. So we co-led that transaction. Details have not been released. That that comes with the release of our quarterly numbers, and so we just basically put out a press release talking generally to that deal because it's a public vehicle, and we've not given other public information. We really can't sort of say that much, but we're actively in the market, looking at credit transactions. I can talk about sort of more generally what we're seeing and how, kind of the types of structures that we're looking at in the BDC, sort of generically. And then on the SPAC side, the SPACs were raised for, principally to target acquisitions in either the cannabis or the psychedelic space. We actually had a deal for our second SPAC with a psychedelics therapeutics company that we had announced and agreed to at the beginning of the year. We terminated that and announced it recently because of market conditions. Essentially, the comps in the space had come down about 70%, and it was just an untenable deal given the sort of market backdrop. So we do have the ability with our SPACs to go outside of cannabis into adjacencies, or frankly anything that we wanted to. But we try to stick to our knitting, and really, in our SPAC business, primarily focus on assessing, targets that are ones where, we think we have an edge in terms of understanding their business, their model, and as a sponsor, taking them public.
Great, super helpful. Can we talk a little bit about how, people on the call, I'm sure have heard about the lending business and then all the issues with the feds and the cash flows and banking challenges. And can we talk a little bit about your approach to credit?
Yeah. So we're incredibly excited about the credit business. And we were from day one when we started the firm. As Richie can attest to, credit was always a foundational pillar of what we intended to do. It just took us a while to get there. In a way, that was a good thing. We were initially talking about doing sort of a direct lending GPLP fund. Then we sort of got distracted with the SPAC, and then COVID hit, and it was a really difficult fundraising environment. And then we sort of pivoted our priorities to launching the BDC, and really felt that if we could get out there with kind of like a retail focused product that's publicly listed, as we like to say, kind of certified kosher, SEC approved, NASDAQ approved. And by the way, that took a long time to get done. We spent probably the better part of all of last year in very, very close engagement with both the NASDAQ and the SEC, getting them comfortable, providing them with legality opinions, attesting to, sort of the compliance issues that they're sensitive to and looking at lending in the space. But look, to simplify matters, cannabis is a total unicorn with respect to the dynamic of the supply of capital and the demand of capital relative to any other industry that's out there today. Because you have an industry that's growing at, anywhere from 15 to 30%, depending on who you talk to, CAGR for the next 5 years and what has been the last 5 years. Like that macro story of the industry's growth, whether or not you have federal legalization in the US, at this point, the train has left the station. 39 states are legal for either adult recreational use, medical use, or some combination thereof, right? So this is a market that's growing. Companies are starved for capital, yet, unlike other industries, they lack the traditional sources of how businesses in what we call regular way industries, meaning non-cannabis, would finance themselves, right? Banks largely do not participate. Federally chartered banks can't because cannabis is not legal at the federal level. Although state chartered and community banks have been playing, although very kind of small. I would say the bulk of the large kind of alternative asset managers, the Apollos, the Carlyles, the Blackstones, the Ares, the Golubs, that whole sort of subset of alt credit managers, that have, hundreds of billions, if not trillions of dollars of capital, haven't really played. And with them, it's not because they can't, because of legality reasons. I think it's more just a lack of understanding
Skill set, huh?
the skill set and the complexities in the space. I think if they take a look at it, they're like, whoa, this is tough. And I think, they're probably sensitive to some blowback on, repercussions from some of their big investors who, might have, certain points of view on cannabis that, are just not worth it for, for the big guns in the space to really risk. So, and then, so largely the supply of capital has been limited to, a very, very small subset of folks like ourselves who have dedicated pockets of capital formed. I would say the episodic and adventurous sort of family office / hedge fund who's, done a deal or two here and there, right? So that's kind of the landscape in terms of the supply. On the demand side, you've got hundreds, if not thousands of businesses, and I'm just talking in the US alone, and to step back, the sort of normalization of the legalization of cannabis is a global phenomenon. We're extremely focused on the US because, it's the seat of the action. It's in our backyard. It's the biggest and the most interesting market in the world. It probably, constitutes 90% of all cannabis activity. But to be sure, as we look out, onto the horizon or past the horizon in the next 5 to 10 years, I have no doubt we'll be doing deals all over the place. We'll be doing deals in Europe. We'll be doing deals in South America. Can
I set you up real quick?
Yeah.
and we've got a couple questions, but if you don't mind, have you been able to put covenants that you wouldn't otherwise put in lending had there been alternative lenders available? And if so, has there been pushback of note?
Yes and yes.
I was setting you up.
So, yeah, so the punchline of the tale that I was telling is that, this huge imbalance between the demand for capital and the supply puts us in a great and privileged position to be able to dictate, terms around structure, around pricing that you just wouldn't see in other situations where, folks are competing to get the loan. So I would say that, the cannabis premium today, relative to the risk that you're taking on loans, given structure and sort of operating metrics, I'd call it probably, sort of 700, 800, 1,000 basis points, give or take.
Nice. Yeah.
And it's purely a function of just, the lack of availability, but it actually goes beyond that because it's really hard to get deals done. And I think that there's a mistaken notion out there, at least in the credit part of what we do, that once you have federal legalization, it will all be open game. All these folks will come sort of rushing in, spreads will collapse. And the reason why you don't have floodgates of lending capital available today is because of the inhibition around the federal restrictions. I think in our opinion, that's grossly overstated. Not that it's not a factor, it is a factor, but the far bigger factor are all of the inherent complexities that exist in the industry. So it's not federally legal. It's legal in 39 states. Every state has its own regulatory regime. Some states are legal for medical, some for recreational, some for both. Some states have require operators to be vertically integrated. Others restrict vertical integration. Some have limited licenses. And then once you understand it at the state level, you have to actually go down to like the local, municipal, and city level, right? California, the most established market in the US and the world, legal and really since 1996, and then for adult use more broadly since 2018. A large percentage of the market for most Californians is closed because municipalities have opted out from having dispensaries, right? So it's not enough to say, oh, California, it's big. There's a whole nuanced set of issues that really make it quite complex just to understand any market at the state level. Oh, it's limited licenses or it's unlimited licenses. So, there might be tons of competition. Well, yes, but if you've got one of two licenses in a municipality that's 5 million people and isn't giving any new licenses for the next 5 years, like that looks very different from one where, they just granted 30 licenses and everybody's going to compete, themselves out of business. So, the regulatory and legal backdrop is really as complicated as anything I've ever seen. And, coming from emerging markets, I've seen a lot of, complex jurisdictions where, where that's a factor. And then you have the market itself, these operating businesses, they're all very different. You have an ecosystem, starting with cultivating, moving through manufacturing to branded products, to distribution, to logistics, to all of the ancillary kind of pick and shovel, parts of the, the support of the food chain, both, tech down to like grow media and lights and those things. And, how do they interplay, right? And so, I think that in our opinion, that's the big, our big barrier to entry or our big competitive advantage. And what is the big barrier to entry? More so than just the sort of legal restrictions. But at the end of the day, it doesn't matter. It all kind of gets to the same conclusion, which is really what we think to be an unmatched opportunity on the credit side today to deploy capital at rates of return in structures and credit risk that is just, unavailable in any other part or corner of the credit world.
So, so the banks have been notoriously not studies in efficiency in adopting new markets or that sort of thing, aside from the regulatory and balance sheet issues, right? So even if the rates come down on some level because the banks get in and they want to lend, based on what you just said, there's insurmountable challenges for them. And I'm just pointing to banks because they're the, lowest cost lenders in general industries, right, with debt,
Yeah.
that sort of thing. But yeah, it seems clear.
Yeah, no, look, the all credit business and why it's grown into $1 trillion plus business, for the likes of the KKRs and the Ares and the Golubs is because the banks have migrated away from that, right? The banks started to pull back from more traditional SME types of loans, a decade ago. And that, gave rise to the explosion of private credit as really sort of an alternative asset class, right? That's what makes us really excited is that if we can just get a droplet of those flows that have gone to, the more traditional parts of the alternative credit world, if that makes sense.
Yeah.
Then
The alternative private lending world. Yeah.
which hasn't shown up for cannabis. And so, when we think about our ability, hopefully, as Richie said, obviously we've got to execute, right? We've got to be good fiduciaries. We've got to make good loans. We've got to make good investments with whatever we're doing. Assuming that we can do that, and we think that unmet need in that addressable market is huge in the tens of billions. Not only have the floodgates not opened, the droplets of capital have barely come into the market in terms of capturing flow from private and public pensions, insurance companies, sort of the constituents of investors that have been, the big money providers that have, contributed to that $1 trillion plus industry, which is alternative credit. Apart from family offices and high net worth, and even there, it's a very small percentage, it's really non-existent. And so, when we think about our business going forward, we know that the demand side for that capital is there. And, we think that we only have to capture, we don't need the floodgates to open, I guess, is the point that I'm trying to make, is that, we want to be there as sort of a trusted hand, a trusted fiduciary, a brand name that they recognize. And hopefully we'll get, some meaningful piece of what we anticipate will be some inflow eventually. Not coming from the banks, though. I just don't think the banks are going to be a meaningful competitor to what we're doing anytime soon.
Yeah, it would make sense that even though deals are hard to do because of all the complexities, what are the companies that who want to grow in the cannabis business that want credit doing if they don't find you or somebody else that's like you?
Yeah, so look, there are basically three ways that they can raise money. They can raise credit, they can raise public equity, and they can raise private equity, right? The public equity markets for cannabis, as you know, Arthur, have been decimated. We're, in the throes of a bear market that, started long before the bear market that we're in for, broader, tech and growth currently outside of cannabis. This has been going on for, probably close to 16 months. So that's not been a great option. The private equity market is, it's open, deals are getting done, but, I wouldn't say that there's an abundant amount of capital there. So, now only really the better deals are getting done, and obviously companies are getting pretty significantly punished on valuations and are having to raise super dilutive capital, right? And that's one of the reasons why, they're okay to, pay what might otherwise seem to be usurious rates of interest on a loan. Because frankly, if you're raising, private equity capital at, 1.5 times trailing revenues, where, competitors and outside of cannabis would be raising at, sort of a 2 to 3 turns greater than that, paying 16, 17, 18% for a few years on a credit facility, relative to the dilution that you have to suffer raising equity capital doesn't look so bad. So, on the credit side, we're kind of like the lesser of some evils for folks. But I would say that in general, whether it's equity capital, public or private, or credit capital, currently, just given the general state of tightness in capital markets, it's only the better companies that have access to that. If you're a fledgling operator, outside of friends and family, you've got very few corners to look around for capital right now.
Yeah, it seems to me like, if you don't grab the capital at what otherwise would be usury rates, then you're not going to live to grow another day. Like, you're just going to stay right there, right?
Yeah.
Which is not very appealing, even though it's probably a nice lifestyle business for people, but it's growth seems to be the thing. So I want to make sure we get to what you want to get to. We got a couple questions, so you tell me what you want to do. You want to grab the questions, or you want to keep on moving?
You tell me. It's your show. I defer to you, Arthur.
All right, let's do this. Let's talk about use of funds in each opportunity that one might invest in.
In the Silver Spike investment?
Yeah.
Yeah. So again, I think if for somebody who's currently, as I mentioned earlier, we're just launching a $10 million convertible preferred security round at the holdco. The proceeds of which are going to be earmarked really to fund kind of the working capital requirements of the platform until such point that we have sufficient AUM built up that we're kind of cash flow break even, which we anticipate to be in the not too distant future. But we want to. It's the same sort of reason why we raised funds earlier on in our existence. It's a little bit of a untraditional approach, like most asset managers, try to get the AUM and then fund their platform off of the fees generated. I think just given the opportunity and how quickly things are moving in cannabis, we just didn't feel that we haven't felt that we have the luxury of time, and we've been willing to dilute ourselves in terms of our own ownership stake to secure capital that allows us to continue to grow and scale. This is about scale, and I think that already today, with fairly modest resources, we've got one of the more robust platforms in the industry, and we have a leadership position, and we want to keep it. So we're raising the use of proceeds for that raise are primarily for working capital purposes. We do have our sights set on a go public transaction. Probably not worth it to get into details on what that might look like, but we've also made the determination that if we could raise through a public offering permanent capital onto the balance sheet of our holding company, alongside having the working capital that we raise in this round, then we've got an amazingly powerful combination. Then we funded our business in terms of operating expenses for the foreseeable future. And then we have a war chest of capital that resides on the balance sheet of our holding company that we can use to accelerate and really scale the launch of our new fund initiatives, right? So in a perfect world, what we like to be able to do is when we launch our, our credit opportunities fund, come in there with a $10 or $20 million commitment from our holding company balance sheet as an anchor investor in our own fund.
Yeah.
And then on the SPAC side of the business, our feeling on the SPAC market is that, SPACs in general, just the whole industry went, banana bonkers, and you had way too many sponsors chasing way too few deals. And so, bad deals were getting done for companies that shouldn't be public with sponsors who shouldn't be, in the capital market business. And I think all of that is kind of, went to one extreme and now it's, kind of correcting itself. But I think at the end of the day, our belief is that, SPACs as an alternative to an IPO or a direct listing will be viable for many companies, especially those in the cannabis industry. And we think that the SPAC sponsor business will be interesting for folks who have two things: experience and let me say three things: an experience and successful track record completing deals and know how to navigate the SPAC gauntlet, which is a really tricky one. Check for us. Industry expertise and specialization, check. And then the third thing is committed capital, right? If you can show up to a deal saying, look, we've got 20 or 30 million from our own balance sheet that we can commit to a pipe that we're going to lead, it just makes, the whole story that much more viable. So when we look at eventually what our capital plans are for the holding company, it's this combination of some critical mass of capital on the balance sheet of the holding company, and put a number on critical mass, 100 million or so, and then having the security of our operating expenses covered no matter what happens, so that we can continue to build the team and not go crazy. We're not like we're scrappy, but we want to add resources. It's we realize that to successfully raise capital, you have to have a team that's deep, that's that's building the relationships with the institutional money that's going to come in 2 or 3 years from now. We want to invest in that today, and continue to build out the platform, both as it relates to capital formation, the investment team, as well as just having best in class sort of ops and admin to support our activity.
And the deals are hard to do, so you need people to help you do them, right?
Exactly. Yeah, exactly.
So there's a question, and we might want to table it, but I'm just going to read it for you. Can you speak of the base case exit strategy, which might cross the line of things you don't want to talk about right now? So I thought I'd throw it in there, right? Yeah.
Well, look, I think the best case exit strategy is that for the holding company, that we continue to grow. We continue to grow our AUM. We continue to grow our AUM through a lot of permanent or semi-permanent capital vehicles, which for our holding company investors command a higher multiple against other types of earning streams, and either be public and just have a stock that's appreciating because we're growing, and the multiples for alternative managers are, as Richie said, it's, the asset management business is a great business. The alternative asset management business is a fantastic business.
Yeah.
And the alternative asset management business with strategies around private credit and permanent capital is the holy grail. And so we're trying to get the holy grail to the extent that we can. So I think that, the ultimate exit for us would be, we're out there in the public market, and we're trading well because we're executing and we're growing the business. And then also, I think, frankly, we've always talked about being an appealing, if someday, 3 years from now, 5 years from now, you have, and I think it's probably more 2 to 3 than it is 5, but who knows, to be honest, you have federal legalization and suddenly, one of the bigger alt managers decides that they want to play in cannabis. I think we'd be a really interesting takeout target for someone like that who, for them to build and replicate even what we have today, let alone hopefully what we're going to look like in 3 to 5 years from now, would take them years to do.
And too much of a slog for them to bother with it now because the opportunities are there, and right. So
yeah, exactly. So that's how we think about, eventually creating value for ourselves. We're all partners and major shareholders in what we're doing, as well as our outside investors who are right there alongside us.
So what would be, I know it's obvious, but let's just say it out loud. What would be the best path for the audience to get to you folks to, look under the hood and decide whether it makes sense to deploy capital let's just say into the $10 million.
Yeah, I think certainly for anyone who's interested, they should follow up with Bill Healy. Bill runs our capital formation group. We've got a full information package. We've got a VDR set up, and Bill can certainly speak to more specifics around all aspects of that opportunity. So I think that would be the best route to go.
Yeah, we have a question that we've covered, but maybe out of courtesy, we might want to just say something real quick. When do you see the Safe Banking Act passage, and won't that spur competition for traditional large asset and alternative managers? And, maybe just a quick statement.
Yeah.
Yeah.
Safe, I don't, I think Safe has a better than 50-50 chance of, or let's call it 50-50 of passing this year. But it's complicated. I mean, we don't spend a ton of time on it, but we spend enough time to understand and know that it's a super nuanced and highly politicized issue in a way that you wouldn't think. It's not like, in fact, it's the people who are more fervent about cannabis reform that are less supportive of Safe in a weird way. But regardless of like when it passes, I think what Safe will do first and foremost is just free up the plumbing in the system and make it easier for operators to deposit, transfer. There's still a lot of kind of stickiness in the basic fundamentals that most businesses take for granted in terms of how they move money around. It's gotten a lot better from the days when I would show up with 400 grand in a suitcase to pay the tax man for our quarterly sales taxes at Papa Barkley.
You can't send 400,000 through Zelle, right?
No. But I think that again, the notion that Safe will be meaningful in terms of opening up capital into the industry is overstated. I think it helps on the margin. I don't think it's a meaningful game changer though. So, we don't really, we follow it as we follow all sort of legislative and regulatory initiatives because they're important for us to understand. But we're pretty unconcerned about what Safe passage means for us from a competitive perspective. And frankly, but we also, to be clear, we want capital to come into the industry. We're not like, we don't want to be the only game in town. We'll do better with a growing industry that has other sources of capital. We want more people to be out there that we can partner with. And also we want to fund, we want to take on debt ourselves, right? Like we can have our own leverage at the BDC.
Right, leverage,
right?
Yeah.
And so, to the extent that we can more efficiently debt finance our own activities, whether it's directly at the BDC or other things that we're doing, that's going to help us as well.
It's cost of capital, right?
Yeah. So I don't want to give the wrong impression that we're like playing off of that. I think really where we're trying to prevail is just to have better information, to use our scale to, create greater distance between us and others so that, we've got bigger and better relationships. We've got more information, we've got a better funded platform with more resources, and we can just hopefully do a better job than others. That's sort of what we're aspiring to.
Yeah, totally makes sense. So we're going to run out of time. Is there something you want to make sure we cover? And for the record, everybody, we're going to have Scott back and the team at another time. I hope you'll come back, right? Yeah.
Yeah, for sure.
He's been super helpful. And Richie, so grateful that you joined in and gave your perspective. It's a real treat to have you here. Really appreciate it. Thank you for that. Scott, you want to close things up?
Yeah, thanks, Arthur. No, again, Arthur, thank you for hosting, and certainly we always enjoy the opportunities to be able to tell our story, and I think we've covered pretty much all of it. I would just maybe reiterate one of the points that Richie made earlier on, Arthur, that you picked up on, which is, when we talk to people about investing in Silver Spike, we don't sort of put that out there as an investment in cannabis. Like, really, an investment in Silver Spike is an investment in a specialized alternative asset management firm. Our domain where we kind of play happens to be cannabis, but and I think that's just kind of an important distinction. Sometimes it's lost on folks, like, oh, you're a cannabis company. We're really not. And so just wanted to sort of make that point. But no, I think we covered a ton of ground. Look, we talked a lot about sort of the credit business. We talked a bit about the SPACs. We didn't really get into sort of some of the forward-looking initiatives that we have on the platform with respect to both special situations and private equity. I'll maybe just spend 30 seconds in closing on that.
Yeah, of course.
On the special sit side, Frank, myself, Umesh, a lot of us, Greg, come from a combination of the emerging markets in the distress and special sits world. There was a lot of inefficient capital that was put out in the cannabis space. Time is up on a lot of that stuff. Much of it will eviscerate, but some of it will end up in like really kind of complex restructurings, and what we think will be really interesting opportunities for us to be a smart and a disciplined provider of capital into these complex sort of distressed workouts, and other types of opportunities that are different from what we were describing or what I was describing earlier. Is kind of our straight lending business, and so we're very excited about that. We're already starting to see some pretty interesting opportunities that are already starting to present there, and we think there's way more to come. And then on the private equity side, again, the focus has been a lot around the credit business, but I think a lot of the analogs that we're talking about with respect to just the imbalance of supply and demand hold true on the PE side as well. You have very little of anything in the way of traditional private equity dedicated for cannabis. Some of the earlier funds that were investing in the space were largely kind of VC oriented. They were doing follow-on deals, but there hasn't really been much in the way of late stage or mid stage to late stage capital available for more mature companies. And the non-cannabis dedicated PE funds have not been a huge factor, and so we think there's a really interesting and gaping hole to play in that part of the cap structure as well, and we've got intentions and have been in pretty serious discussions with folks to come and help us build an effort on that side as well. So just wanted to give a little airplay to that before we closed out.
Yeah, at the risk of sounding like I know what I'm talking about, what I thought is, from a private equity perspective, is that the aggregation or assemblage of the smaller companies, because the big guys, even if they were in this business, wouldn't even be bothered with it, as they are not bothered with small deals. And if you aggregate it, then you'll just sell the whole thing to BlackRock, Blackstone, because now you've done the heavy lifting for them, and they say, okay, here's the coupon, right? That's it.
Yeah.
That totally makes sense to me.
Yeah.
Bill, thank you very much. I see that you're still here, and everybody else who joined the call. And thank you all for being here. And I really, really appreciate your insights, Scott. And we'll do it again.
That sounds great. Anytime, Arthur. Thank you. And thanks to everybody on the call.
And as I always say, thank you for everybody here spending with us the only thing you can't make more of, and that's your time. Till next time. Thank you.
Thank you.